Good morning, everyone. Welcome to the Eurotrade. Let's see what the metals have in store for us. But before we begin, if we're meeting for the first time, I'm Market Stalker D. I'm your host. I've been trading for 19 years at this point, and 13 years out of that, I've been doing commodities trading for various prop firms. Alright, let's have an overview of levels, gamma exposure, and some technicals to help us along. Silver is the first one. So I still have 70 as an area of interest. Now, obviously there was some dealer hedging during Asia. I did try a long in the middle of the night, but then this was the time when I was looking at it. So I always wait for the flush on most days unless I think that they're going to go higher. So usually there is a Shanghai fake out. So you're seeing that here. Doesn't always happen. Sometimes they just kind of run it in a single direction. But those days are rarer than the ones where Shanghai flushes it out and then they kind of choose the right direction. So I had the direction in mind, but then I couldn't really watch it, and it wasn't moving for like an hour. So I decided to go to bed and take a tiny chunk of it. But I am expecting 70 to be retested, and then if we manage to reclaim that, there is a very good chance that we start trending towards the next area of interest, which is all the way up at 75. Do I think that's going to happen today? Probably not. Like, this is the holiday week. It's a little bit weird. But retest of 70 is definitely on the cards, especially given that we had another all-time high this week. So I don't really want to fight that. And the reason why I'm entering before the initial balance break is because both copper and gold have exited the initial balance. So I'm looking at the metals as just an asset class to get a feel of how things are positioning. Quite clearly, copper is quite bullish here, and it's already breaking out from the Asia high. If at some point of the day we retest Asia high, maybe there's a long there, but obviously there's a time component, so ideally maybe a sell-off into the euro close, and then another long. I am going to be on I think the entire fast markets today, so we can revisit that trading idea the closer we get to that time. Out of some of the other metals, I see gold is tagging VWAP and extending the initial balance to the downside, but right now they're ending the previous TPO, the previous 30-minute candle, with a pretty aggressive buying wick. So that's still long. Platinum tagged VWAP and immediately went into a hammer. Not a huge fan of hammers, to be honest, but in this situation where everything is so bullish, I'm willing to give it a benefit of the doubt that it's going to fail the auction and carry on higher. But again, I don't know at this point. I'm just observing, and this is why I think that silver is maybe lagging a little bit behind them, which is giving me the opportunity to potentially front run the idea that we're going to extend the initial balance higher above this high, this inside high, and go back towards the area where the dealers hedged against the very high open interest area, which was at 70. So they overshot that, and then during Asia they immediately shied away from it. So now remains to be seen whether they want to run this higher. I'm probably going to have to wait for this to happen in the next sort of 2 to 3 hours. So it's not going to be a quick trade, I don't think, unless something extraordinary happens and we suddenly start trending upside. But yeah, so I'm just going to sit on this and analyze some other markets, and then we can see whether they're actually making some traction in my desired direction. If not, we can cut that early and then wait for a better area. Now, when it comes to the lower side, let me just have a look. Let me just mute myself because I'm finding it like it's kind of double talking in my ear. Let's see. So I mean the implied volatility is actually rising on silver. That is a little concerning, but at the same time the put call premium ratio dropped even further, which is very bullish. So they are expecting momentum at this time of the year, and they're actually everybody's long, like everybody and their mom is long on silver. Now what do we have downside? I mean, not much, to be honest. Like, it's so thin on the put support to the downside. But, you know, again, that makes it vulnerable to any sort of positive news that we may get. Because if somebody starts to either take profits or something, yeah, we could see this just collapse completely. And again, until 65, I'm not seeing too much. I mean, I suppose there's a little bit of open interest around 69, and you can see they tested just above that. And I mean, for the actual Shanghai pre-Shanghai open, they did go down to 69 and then bounce from it. Again, during the course of the day, maybe there's a hypothesis that they'd retest the 69 and then bounce again. And in that case, we would be looking for the test and or a break of the Asia low and then a prompt reclaim of that area. And then we're going to have a swing opportunity to take it for the entire dollar back to 70. But for now, we're kind of in the middle of that. And I still want to try seeing if we can push outside of the initial balance. Even if I don't hold this all the way up to the Asia high, maybe we can like do a little scalp and then wait for the flush and a reversal. So that's something of interest, I suppose. But yeah, not too many things happening right now. We're barcoding sideways activity that we see very, very frequently for this time of the year, unsurprisingly, and this time of the session as well, because London, when it opens, it's a bit of a weird time when not many people are actually trading metals. So, you know, you have Asia that is important in the metals pricing, then you have this almost like a dead zone between now and LME. LME trades base metals, so copper is pretty reactive to that. And then we have COMEX, which is a big boy for the precious metals. However, yesterday, like all of the party was effectively in Asia. You know, if we go back yesterday, this was Asia. So this was where my yesterday's profit of 1.5K came in. And that one started moving immediately, even though we had like a big wick here before. And again, you can look at this wick as the pre-market shakeout. And then they just kind of ran it higher. And then once we were up here, I went to bed. And I just let it run. And it hit my target. It was actually really quick. Because I think my target was somewhere up here. So yeah, that was a very drama-free day. Now today, Asia. And then, you know, if you see how London was trading, this is the London volume profile, and then this is COMEX profile. It was very spiky, very, very spiky. Kind of a downtrend, but still we had this reversal late in the day, and then it carried up. We also had the wobble back up. This was a neutral day at this point. So if you look at the initial balance and where the initial balance was, they wicked it up upside, then wicked it the other way. Then we had the euro close. We had that test of VWAP, slight overshoot, and then it kind of went back down. You had another opportunity to maybe run a trade from 68.25, which was the call wall, minor call wall, but still a call wall, yesterday. and then yet another test of VWAP. But it stayed kind of contained to the downside. So there was opportunities. I wouldn't have shorted this, but I would have maybe liked to get involved. I think I was a little bit distracted because I was waiting for the group coaching, so I wanted to make sure that my brain is sharp for that, and I already made money on the day, so I was like, whatever. But I was watching it. I wouldn't have been short though, so I would have been looking to scalp these long opportunities to the opposite side up to VWAP, and then effectively scalps D style. How can I set that I see ticks on a chart like you? Okay, let's have a look at that. So you go into settings, then you go into charts and data, okay, and then here you have chart value display type. So normally the default is set to dollar amounts, but you can change it to ticks, which is my preferred way. But you can also change it to percent or points. I prefer ticks because ticks are the smallest measure that the futures product can move, and it allows me to calculate my risk a lot better and to not freak out when I'm planning out my trades. So whatever the size that I'm in, whether it's 1, 10, or 100, ticks remain the same, and you can argue points do as well, but percentages are a bit weird to me because in futures you can't exactly scale, especially not on smaller accounts. You can't really scale in percentages to a great accuracy because you can only use full contracts, right? So to me that's a bit pointless. So I always have in mind like the maximum default size across all my products, because sometimes I will be in with 2 products rather than just 1, so I need to make sure I'm not going over my max default size. And then once once I'm in some buffer territory, I start to slowly maybe add 1 or maybe in additional micros. Really depends, so if I'm going to go up from 2 minis to 3, probably wouldn't do it immediately. So I would do 2 minis on 1 product, and then maybe like running 5 micros on the copper, because copper is a bigger one tick wise. It's $12.50 rather than 5. And the way silver moves, it's still more risky than copper because copper doesn't move nearly as much. Copper moves maybe like 150 ticks, maybe 200 ticks in a day, whereas copper is like 600, 500. It kind of floats around a pretty nice range for the day, just on average. So using a 55 tick stop on silver on 1 contract would be similar to using a very tiny stop on copper, right? So let's say like this. So if 55 ticks on silver, that would be my risk of 275. But if I were to use 55 ticks on copper, that would be 687. So obviously you have to account for that. You also have to account for the average daily range. I don't think I need to use 55 ticks on silver, but 35 to 40 would be similar. So if we do that calculation, that brings my risk down to 437.5, which is still double the amount. So what do you do there? Well, you cut the positioning in half. So you go to 5 micros, and that way your risk per trade is somewhat contained. Now, don't get me wrong. If I have a star setup that I know agrees with everything, longer term uptrend, all-time highs being made, I get a test of a high level of open interest to that same direction, so long in silver. We get the value area test or the Asia low test. I will be in with more size, right? So I know very well which setups work for me and which are a little bit less probability. So if I see a star setup, I will go in with 2 or 3, at that point. But the stop loss doesn't change. So my risk increases, but the stop loss to me always has to be done by the volatility of the product and not the dollar amount that I want to still keep to 275. So again, you have to have enough buffer in order for that to work properly. And yeah, but all of that, I wouldn't really advise novice traders doing that, like, messing around with your risk per trade. Why? Because ultimately you still don't know what probabilities and setups work for you long term. And look, I've had traders who do really well with like failed auctions, but even though the setups are perfectly valid, they don't do very well with sort of like extension of initial balance type setups. And, because they kind of freak out, they take the profits early, or they can't stay in on the trade for whatever reason. Because of that, I would then tell them to only focus on failed auctions, for example, because that is their strength, and to avoid opportunities when the markets are just breaking out, and obviously their emotional side is not able to handle that setup as well as the one that fails the auction and goes the other way immediately. So pretty much immediately. So you have to be hyper aware of what your strengths are. Now for me, if you were here for group coaching, it was me and Hoop. We have very different styles. So Hoop's issues are that sometimes he overtrades and sometimes he goes in with slightly more size than he should be in. But on days when that works for him, he makes an absolute killing, right? However, that strength of his is also a slight weakness, right? Because he can overtrade. When things don't go wrong, he keeps going. And I have the completely opposite problem. I'm not a scalper. So to me, my problems involve holding trades too long. So, when we are crying on each other's shoulders about a day that didn't go well, it's usually like, oh, Hoop, I held the trade too long again. It's like, all right, well, why don't you look at this? And then, we kind of try and give each other some coaching with a polarizing, expertise, one scalper, one. So we kind of try to find the middle ground. And Hoop is my trading buddy. So, we talk at least twice a week. Sometimes we talk more often. Like sometimes we'll be just chatting every single day. But it really helps to have somebody there who knows your weaknesses and your strengths, and then has something creative and constructive to give you as a feedback. And I think that's a very important part. So yeah. But yeah, it's funny how two different traders with obviously vast amount of experience, both of us, but we're kind of helping each other on difficult days. Like me. Yeah, Bruno's saying you and Hoop create the perfect trader. Yeah, exactly. The middle of the middle. It's like just the right amount of trades with just the right amount of hold time with just the right amount of size. But you need, more than one head for that to happen. It still fascinates me. Like I wouldn't be doing this if I wasn't completely still fascinated by the markets. All right, let's have a look at what's going on in chat. Isn't gold worth trading now for you? No, because gold to me, let's, again, I've done this so many times in this stream, but I suppose we always get new people. So, look at how gold is, it's just muted. It's generally not a great time for gold at this time of the day. Another point that I really don't like about gold is that once it starts moving, this one was a smoother movement because most gold traders, I believe, they are going for the Christmas, Christmas travels and, going to visit their families. So this was a smoother trade than normal. But then if I dial it back, on the days when copper, so this was the 18th, let's have a look. So on the days when silver, sorry, not copper, but silver was moving very nicely, gold was just being really meh. And the problem with gold, to me, so here we go. Let me see. Yeah, so this is even worse. So let's just put some vertical lines here to demarcate the times of day. So this is start of COMEX. And this is the start of COMEX. So you tell me which one it looks smoother to you. Which one looks smoother? Because to me, this is a very clear, very clear reversal after the first pump higher. And then obviously some kind of a failed auction here. That brings me a lot of ticks for no drama. What happens in gold? And let's also measure this particular candle. And why the spiky non-directional candles annoy the hell out of me in gold. This is what causes emotional dysregulation. There you go. So this 130-minute candle, 363 ticks wide. And yet it's not directional. It whips down and then whips back up on you to reclaim VWAP. And then what? Nothing. Nothing. The only time it moved in a similar way was after the euro close. But even so, let's measure those candles. Let's measure this one. 150 ticks, and I base my stops on the average session range. The session range on gold is, at this time, is about 500. So I have my own scalability, and if even if I use that scale, I would still need to use 109 ticks for my stop loss. And if I want to trade micros, that's over $1,000 in risk. How much money do I have to have in order for me to put $1,000? At least 50K of actual buffer, not like, oh, I'm starting an XFA on the you know, new XFA with 4.5K risk. So just from a market risk perspective, that's a ludicrous amount. So in order for me to absorb even the smaller candle, because this is the smallest candle, right? It's the smallest candle. For me to absorb the risk of staying in across 2 30-minute periods without drama, I would need to use, I don't know, 250, 300, never mind 109. That won't survive with the spikiness of gold. That won't survive. And then once you get the move, let's say you didn't catch this move, and now you're looking for, you know, further follow through. And what do you get? Watching paint dry, but in a violently range-bound condition where each candle is 206 ticks wide. It's like, what the hell, gold? What are you doing, man? So for me, that's too much risk from the market perspective side, and just not enough follow-through for what I'm trying to do. You know, I want to be able to trade assets that will provide me with clean follow-through for, you know, 2 to 3 hours. Gold doesn't offer that. It offers that very rarely, but look at it. Like, even when it starts to trend, there is always drama. And then this is Asia, right? So sometimes I trade Asia because of this. I don't like trading Asia because that means I have to not sleep and to go to bed instead of my usual 10 p.m. I have to go to bed at like 2 a.m. But, you know, that's where the smooth action is. So if I'm a trend trader, which is what I should be in these types of products that keep making all-time highs, you know, I look for smoothness and, you know, how the price action behaved before. And to me, this one, like if we assume the same idea of reversal, so let's say failing the auction, I mean, even if I only hold it for, so let's see. So first of all, let's measure this. What sort of risk do I need here? Well, no, not more than 55 ticks, right? My 55 ticks, which is on one microsilver 275 risk, that is much more palatable to me. And then look at the follow through. So if I capture the 15-minute reversal here, breakdown of VWAP, you have like how many R's here? This is like a ridiculous amount of R as a follow through. with very little risk, with very little risk. That is the main thing here. So let me do something like this. So this will be the trade, right? So ignore this. I've just hacked the fib tool to give me the risk reward. Now your stop loss is 1 hour, so this will be then net 1 hour profit, where 2 says. I wish that I could edit labels here, because on my other platform what I can do is I can actually hack. I can hack my fib tool to actually show me actual R's just by labeling it. But we're doing something similar here anyways. But yeah, just just imagine, so 0 to 1, that's your entry, and then you have 1R, 2R, 3R, 4R, 5R multiples. So for me, the upside here is that the follow through on silver is much higher than on gold, for a lot less risk tick wise. So 55 ticks can give me a follow through of over 5R. Not that I'm going to be in on it, to be honest. I would be, I'm usually just happy with 2 or 3R, unless I see that there's a potential for more. But yeah, so it's it's one of those market risk things. It's like, how much do I have to risk in ticks, and how much does this product move when it does move? And silver moves nearly every day throughout the entirety of the day, with the exception of this time of day. But yeah, so it's just a market risk thing for me. So I think silver is a better product with less drama at the moment. And look, I traded gold for as long as I traded crude oil, so 12-13 years. I do still trade it, but I just think it's gotten itself into a really weird position where it's so high up, and it's gotten a bit more speculative because people have started trading it more, like retail traders. And I don't like that. I can see the randomness of the retail traders affecting gold pricing. So it's not the smooth OTPs that, other time frame participants that just step in, plowing a lot of size, and then everybody follows. It's like a push-pull between retail and institutional. And, that's the same reason why I don't like Nasdaq. I'm starting to dislike gold. So for me, I need to have smoothness of movement. That is, something that I look for in regards to whether I'm going to trade something. And then you have crude oil, and I stopped trading it intraday. I only traded through options because of a completely opposite reason, because it dried up. And it's just not a good product. It's not worth it. Like, for the amount of ticks that you get, especially during NYMEX when I trade it, it's not worth it. You get like maybe 100 ticks with the entire range. So you would have to catch it somehow at the extreme of the range to capture 70 ticks. Extremely difficult. That's just not a realistic thing to do, right? And I like to work based on the reactions from levels on 5 or 15 minute time frame. I don't really nitpick looking at 2 minutes, 1 minute. I don't feel that that's necessary at all, especially not with the targets that I look for. But crude oil just does the entirety of the range in 3 seconds, and then that's your range, and then it dries up. I'm like, okay. So, swings and roundabouts. I have a question. Hi, Dee, could you please explain your current setup? Usually you wait until Asian low or high to get reached. Yeah. So because of very lack of put supports, or anyone really buying puts until 65, there is really not much to push this lower. So until we get back up to 70, just the chain is practically non-existent to the downside. And hedging is hedging levels 70. They work twofold. They work as magnets, and they work as potential hedging areas if that's, if the market is in positive gamma. But with the fact that nobody is really selling this, there's nothing. We would need either news or some big boy to come in and actually take some profits. But I believe the take profit move actually happened a while back. So I'm just going to move to a slightly higher time frame. And if you look at how we had that one day where we reached 61, here we go. I honestly think this was a take profit move towards like the middle of December. So this was 12th of December. I think this was them. Who's they? The wizards. Institutions taking the profits, right? So they were like, okay, well, we're just going to smash it down by about 400 ticks, take our money, and then just disappear. So I believe that the take profit move already happened. So whoever is left trading this, they're still long silver. So it's like, you know, if I look at the let me see if I can find something that everybody can go and reference rather than my API pings. Yeah, so let's let me just have a look with maybe. I mean, it's such a thin. It's horrible. So yeah, no, let's go 50 actually. So here's something that you can just Google: bar chart, silver, futures options. So I've set it to monthlies, 50 strikes, right? So let's analyze this. Let's have a look at how much open interest is to the downside. So where are we? We're around 69,535. So let's get here. So let's see the open interest. You'll see how ridiculous it is. So okay, there's a little bit of 69, right? A little bit of 69. But this is small. Like this is weak. You really need, like, look at 70, 2,954. That's the open interest that matters. Everything else around these levels, 12, 1, 2. A little bit at 69, probably why Asia bounced. And then what do we have lower? 1, 1, 1, 2, 17, 1, 6. Literally nobody is interested in the downside. There's literally no one at the moment in like the gamma exposure. Nobody is interested to the downside. But look at the upside. Okay, these are smaller, so they can cause maybe a little bit of slowdowns. However, you get to 75, that's another big boy. That's why 70 and 75 are my points of interest, because that's where the gamma is. And then we also have some higher calls up at 80, which is insane. But you know, if you don't have anybody to the downside to effectively defend anything, two things are going to happen. We're going to migrate back up towards the next pain point, which is 70, as a magnet, or they're just going to stay here. Now, obviously, gamma flows can change intraday. So let's say that somebody does come back into the office from one of the big boys and goes, hey, let's take some more profits. Yeah, that would cause a huge reversal. And then because we have nothing to stop it to the downside, apart from a few, few contracts down at 69 where the Asia low is, which is why, again, that is one of my setups, test of Asia low. So if this one fails as a magnet back up to 70, and actually my limit here is not correct because I want to be slightly below it because it's not some massive move. So if nobody takes profit from the big boys, and we don't really have, I don't think we have any releases. And have you seen the CPI? CPI was nothing. It was like a really cool CPI, and the only thing that moved was like copper. So luckily I was on copper, but oh my god, silver was just like one pop higher and then nothing. That is telling you that, and I was looking at the tape, no big boys, like nothing. 1, 2s, 1s and 2s and 1s and 2s, occasional 3. I think maybe I saw one guy with like 5 contracts. Nobody was trading, right? And yet terrible CPI. So it's like, that's bullish. It should have like sent everything skyrocketing. So that is telling you that not many people are in the office actually actively trading from the institutional side. And yeah, so I'm taking the setup here based on gold failing the auction, and just for the sake of being a little bit quicker here. So gold tested below the initial balance and is now returning. And even though I'm not trading gold, I'm still using it as kind of a benchmark, maybe a bit of a leader. So if this fails the auction, then we're going back up to the Asia high. But I'm kind of front running that. Why? Because I'm also seeing platinum that is already well inside its own initial balance and already failing and trying to go above the ADR high. So platinum was by far the bullish of all of these, and pumped really nicely into ADR high. So this is my other platform with the Blatic indicators, AMP Futures MetaTrader 5. Yes, very old school, but it's logic. I don't care what the platform is, the logic still works the same way, and Granny D likes this platform. So already we're halfway through the initial balance on platinum. So just looking at the overall state of the metals, it makes more sense that we're going to retest 70 than retesting Asia low at this point. Like, we need some more volume. I will be looking for maybe a retest of Asia low during COMEX during the fast markets, probably close to the euro close. So I would want to see a test of 69 and then a reversal, and then maybe run that trade into the end of the day back up to 70. But on the flip side, if we climb up to 70 ahead of that time, and then we bust through the Asia high, so we're now holding 70, we've gone over the open interest pain point, and then 70 becomes my new orientation point for further moves. And then if we're well above 70, I'm looking for a, like, let's say we're floating about 70, 60 at the time of euro close. I will be looking for a sell-off into the euro close and then another reversal. So those are three hypos, but I don't really want to be short unless something super obvious happens, right? I'm open to it. I'm very, very open to it because the implied volatility has rose. It has risen. But at the moment, I just don't really see it happening, just purely because the put support areas are just so light in open interest. There's nothing there. So again, if gamma flows change throughout the day, so will my hypos. This is the nature of situational awareness and staying objective with whatever's happening rather than me wanting this to go higher. So it's not a matter of me wanting this to go higher. It's just that at the moment, I don't have enough data to formulate shorts. This is all looking extremely bullish to me. And the fact that we're still hanging on to VWAP for dear life and not really managing to find any weakness below it, even though we tested it, so we're now still stuck in a range, the magnet towards 70 makes more sense. So hopefully that clarifies things a little bit more. And again, I could be wrong, which is why we have a stop, and I could also exit early, right? If it gives me an opportunity, my 55-tick stop offers me enough time to react and to actually save some money on the downside if we start going back the wrong way. But yeah, for now, it's just floating around the entry, so it's all good. D, what do you think about NQ? Generally nothing. I don't think about NQ, if I can help it. I don't know. So I think they are very quiet. I think since I'm on a combine, so no, on an XFA here, I should have NQ. Yeah. All right. So I mean, NQ for me has gone dead. I don't like trading it at the best of times, but I mean, still long biased, right? As a general outlook. Where do you have the next supply? Up here. So the supply is up here. And we're a ways away from it. We're now going through some... Are they lower volume areas? Hold on. Just, no, so that's a high volume node. Yeah, very, I don't know, sticky. With an upside skew. So yesterday, I think there was some movement towards the down, towards the later part of the day, but it was like watching paint dry. Because I was watching the main broadcast, and Just kind of looking at chat and stuff. But yeah, it was a tough day. Like the only thing that happened here that I can see was a reversal right before, so half an hour before Euro close. And where was Asia low? Okay, so that could have been a setup, I suppose. So we had the Asia low, similar thing that happens in metals, right? So smash below the Asia low, just like a little bit, and then a quick reversal, and then a test of VWAP. So same, right? Where's the Asia low today? Let's have a look. And the reason why I'm not looking at the Asia high is because this is a bullish equity product. Was this Asia high? No. So we actually finished Tokyo down here. Yeah, this is looking disgusting to me. So we went below the Asia Tokyo high, and then they sort of crept back up. All of this just smells of lack of interest. I'll be honest, it doesn't look great right now. We have no releases today to push it along. It is Christmas week. I think the metals are where we need to be, not equities. Equity traders, they finish early. They finish the year already like 15th of December, and then it all goes dead. And then there's a period between Christmas and New Year that is the real Christmas rally. I don't know whether you were listening to Andre a few weeks ago, because he did a little bit of research around it, and he said, no, the Christmas rally is not actually in the run-up to Christmas. It's actually in between the Christmas and New Year, like the 3 weird days. So whether that happens, maybe, but to me, this all looks very, very sluggish. And I think we've got smoother products. I don't know why people are so obsessed with NQ or bust. It's like, yeah, I know it moves a lot, but there are times of the year when you should really look elsewhere. Like think about this, if you keep doing everything just because other people are doing it, you are just an NPC. You're not really innovating. You're not thinking with your own brain. You're like, oh, well, that person is trading NQ and, they're doing great, so it should work for me as well. Life doesn't work that way. If it worked that way, everybody would be multi-millionaires. Everybody would have everything they ever wanted in life. So clearly we're all very different individuals. So if you're struggling with NQ, I'm always saying this to people, if you're struggling with NQ, first thing, try YM, try ES. If that's not working either, move away from equities altogether, go into metals. Try RBOB gasoline futures, beautiful product to trade right now, heavily correlated to crude, so you can use crude levels, but express your opinions in RBOB. There's so many markets. There's cattle, still trades only in the regular trading hours. There's no overnight trading. Maybe that's your jam. If you're finding everything too difficult, look at corn. Coach Jack is extremely successful as a corn trader. It's slow, but it has times of the year when it moves. So try all of it. Try soybeans. I've never traded them. But there's so many things that are amazing alternatives that are not as speculative in price action ways as the NQ. NQ to me is just price action cancer, man. I look at it and I feel sick. And now it looks calm. So now maybe D is going to no. But I have traded NQ extensively before and for the 2 years into COVID. And then it went bonkers because everybody and their mom became a day trader. And it changed the way price action looked. Suddenly we got like crazy liquidity, but spiky candles. And, I totally understand why people can't hold trades in NQ. Those people who can, like the Diamond Hands dude yesterday, those people are like, although I don't know whether he traded something else, didn't he? He traded RTY. If you can hold trades in NQ, you are then somebody who has extraordinary control over everything. Or you're using wider stops. I don't know. But every time I tried NQ, even I had negative risk reward on it because I wanted to take profits quicker. And, it would get to 0.5, 0.8, and I'll be like, oh my God, the time of day is wrong. It's going to turn around on me, isn't it? And then I would take profits. So I didn't hold it necessarily for 2 hours. It was more like quick sort of moves just to generate a little bit of a buffer. And then that amplified like tenfold during the COVID times. And then I got sick of it probably about a year and a half after COVID. I'm like, you know what? This has gone way crazy. So D is gonna step away. But I still trade DAX in the morning when I can. Usually on Fridays because I don't have a stream. And, I'm still hopeful that at some point we're going to get Eurex. But, with the recent platform issues, that's probably even more on the back burner now. So, yeah, I can stay patient. There you go. Jay says I trade orange juice. Yeah, that's what the movie was about, right? Trading places, frozen orange juice. Do you think the GDP news at COMEX Open may not have so much impact on silver? I mean, GDP, it does impact. It does impact silver, but again, just seeing how lackluster this, like CPI is a bigger release for silver, right? Because CPI is used as a protection from inflation, as are most metals these days, like gold traditionally. But in recent years, copper and silver have also taken that role. And yet, it did absolutely nothing. So GDP for silver, yes, it's an important number because, GDP. It affects nearly everything. But I don't know. I mean, if I don't see anybody big on tape, maybe a whip up and down, and then we'll see what we have up after that. I'm not going to trade into that. So whatever happens by about 1 o'clock, so half an hour before GDP, that will be it. If I'm still in this trade, really, I have something. Module being blocked. I need to see what that is happening. What do I mean by holding something to 2R? 2R multiples. If 1R is your initial risk, you stop. You want to hold it for 2R multiples. And then if you, like me, maintain the profitability between 43 to 62%, you're absolutely smashing it. And it allows for certain days that are, Muppet moments as well. Some people think that 2R multiples comes with 30% accuracy. No, it doesn't. 5R, 6R, 7R, even I would say over 3R intraday, that comes with very low accuracy because those opportunities are few and far between. But 2R, doubles. That's been my mantra, and that's how I teach my people, market stalkers who come to me for training. So in the Pro Dev program, I literally just drill it into people's heads not to look for more. Unless it's an extraordinary situation where we're in an outlier day and you somehow manage to catch it at the bottom of the Asia. And then you're just riding the wave and then you let it go. But that's going to happen 8% of the time. I'm preparing a video that I'm planning to release on Friday, so on the 26th. And it will be all about average daily ranges, average session ranges, and 3 strategies involving those, how to use them. Because people are starting to notice that our Blatek Discord utility server is live, and they are asking questions on how to use it. Now, obviously, if you are a Pro Dev student, so you've gone through the Market Stalkers method, Pro Dev program, you will know how to use that. But there's a lot of people who haven't done it, even though we've had 3,000 people on the Pro Dev. So it's, I think it's a very important thing for me to explain how to use those levels, because there's so much interest around it, because as you've seen, they're pretty reactive. especially if you can match them with another confluence level. Like, you know, if I see ADR low and Asia low matching, that's my star setup. I'm like, wow. And I salivate over it. I'm like, this is so good. It's beautiful. That's where I'm a complete trader nerd. You know, whenever something matches up and looks beautiful, it can still fail. You know, you still have the other, you know, 8%, the other 8% when you do go into an outlier day. But it's lower odds to just smash through even when it looks super bullish. Like, for example, I think yesterday, let me just go back yesterday. So, you know, yesterday it looked like ultra bullish. But let me just show you how the Tokyo session range worked. So here we have the Tokyo. Let me just... Tokyo Monday, right? So as the day goes on, my average session ranges are these little blue lines. That's just the Tokyo range. Just the Tokyo range, nothing else. So it tracks it in real time. So what I'm doing here, I'm going back in time, which is not erasing the candles, but it is erasing all the levels. So you get the picture as it was at the time. The reason why this only appears here is because if you go on the 1 minute chart, you will see it, but until there's enough data, you won't see it on a large time frame. But here it is. Session range high, 69.50. So as we go in further in time, oh look, we hit average session high, make a 3-bar reversal, and then smash back into the VWAP. That's a setup that's a very high probability, right? And same thing can happen for ADR. Yesterday was a pretty quiet one, but let's have a look at some of the other days. And again, average session range for Tokyo. Smashes into it, overshoots a little bit, but then fizzles out. That's the second option. Hits the ASR and then just runs out of steam. And then, you know, you even have London. Very tight session ranges, right? Very, very tight session ranges. But then once they hit, they pretty much stop. And then they reverse. Where do they reverse? Back through the London range. You know, having those price points, very important. But one thing that I'm seeing is that over the last few days, ever since this Christmas period started, from last week, we're actually missing ADRs and just by a little while. I suppose we get close to it, but this is probably a range compression for... So when you start missing ADR high, ADR low, it means that the range is starting to compress and the indicator just needs a little bit of time to catch up. So something to keep in mind. And where are the ADRs now? Since we haven't had any new highs and lows on the day since Asia session, still sitting at 71.150 and ADR low sitting at 67.90, 98. But the London range is currently pretty tight. I mean, I suppose we have the general reference for the London range, which is bigger, up to 70.22. Hold on, is that the London range? I'm just going to check something because, yeah, it is the London range. So, you know, it does move. And the London exhaustion is actually sitting just above 70, just above Asia high. And to the downside, we're sitting at 68.85. So those are kind of like intraday sort of levels where some kind of a stopping the price action advancing should happen. I don't like doing breakouts into those. Alright, so we're trying to go above the initial balance now. A little pop. There's a tiny little pop outside of it. We'll see how that works. But yeah, so let's keep in mind that the average session range high for the London session is just above Asia, but my take profit is actually at just sub 70. So it should be fairly reachable. Again, not the biggest trade because we don't have the opportunity for that right now. But the magnet might do its thing. So let's see. And let me look at the tape as well to see whether They're actually doing anything? It's a very quiet tape. Oh my god. It's like, poke it with a stick. Is it alive? Look at this. This is current silver tape. So mildly positive CVD, cumulative delta. Just nothing happening. Hello? Someone step in. Yeah. Ooh, somebody stepped in. Yeah. Tiny little step in. So yeah, it's that's very quiet. It's very quiet. So we need to wait until people wake up. Xian says, can you repeat the reason for price more likely to hit all-time high than Asia low? So it's to do with the gamma exposure and lack of put support. So, in order for somebody to hedge into something, you need to have people that are actually selling something. They're either buying puts or selling calls or something. They need to have something that will drive the market. But at the moment, the open interest to the downside is practically non-existent. So that's why you're looking at the magnet back up to 70, where the high open interest is over 2,000 contracts. I think it's 2,700. So yeah. So that's the reason. You need somebody to drive things. And if you don't have any interest and everybody's long, who's going to drive the downside? Like, think about crypto markets back in COVID times, right? Was there anyone selling crypto? No, everybody was long. So what was going to drive the downside? Nothing. It's the same thing. So, very thin OI to the downside means nobody's interested in the downside. And furthermore, the put-call ratio in the premiums, it's gone even more bullish now. So yesterday was, I think it was like 0.2. Now it's at 0.06 or something. Heavily call skewed. So there's no reason at the moment with the gamma flows as they are right now for silver to go down. It could change. Again, GDP, maybe some people offload some positions in the run-up, which could give us the test of the Asia low. But still, the 69 open interest level is very light. It's like 700 contracts. It's in terms of like moderate versus strong support, it's very light. So, anyone with slightly more contracts there, they can just hedge right through it. So we'll see. If that starts happening, like I said, it works both ways. Open interest being non-existent. It also means that the dealers could be forced to either close out some positions or to keep selling more in order to remain as delta neutral as possible. That will amplify the downside. So if they're caught red-handed, right? If they're like, oh shit, we were long and now everybody's short. Sell. So, they get caught out as well. It's not like they're faultless. They're like these like wizards who are never wrong. Quite the opposite. They get quite surprised when things start going a little bit crazy. But they have enough cash flow to manage things because, when things are going up and up, typically dealers are short gamma because that's the opposite to whatever the majority of investors are doing. And then they will be actively kind of hedging up and down on the day to generate liquidity, providing the best bid and ask. So the more transactions there are, the tighter the bid and ask spread. And that's how the rest of us can have nice entries that don't have much spread at all. So thank you, market makers, right? But yeah, so low open interest to the downside means magnet first, but if something changes, then there's also nothing to stop it from dropping. So, I'm just staying open, depending on what the gamma flows are looking like right now. And right now, everybody and their dog are long. Karen says, do you use ATR? And if so, how does it work? Or can you give me an understanding of it? Well, not in this stream, because we're tackling different issues. But again, keep your eyes peeled on my Market Stalkers channel. I am preparing the video on ADR and ASR, which are my ways of using them, because I use them as levels. I use them for other things as well, but you know, scaling stops and all that. ATR, I've got to be honest, I've always had a bit of a problem with it because I trade through multiple sessions. So, you know, I look at Asia, I look at London. Sometimes I will run trades from Asia through London if the market is in an outlier day. But, you know, if I'm basing my stops on the ATR that I'm looking at in Asia, that's typically not going to be large enough to withstand, especially not in gold. It's not going to be large enough to withstand the COMEX whipsaws of in gold. What are we seeing? 250 ticks for a single 30-minute time frame. So you have to base your stops on something that is session specific. And for me, I banged my head over it for so long until I came up with a solution. There was ADR, which is just looking at the daily candles. But then I was like, but why can't somebody look at ASR? That would be like regular trading hours or the current active session, like let's say just looking at Tokyo. And then going back 10 days. And then using those as levels. And scalability of the stops. So it's like, why is nobody doing this? So I did it. And that's why, you know, all of these things that I've uncovered, I'm not going to say that I invented them because, you know, some people claim they're the algorithm. I'm not going to claim that. It's always existed. Let's say I've just uncovered it. It's kind of like, you know, finding something that is a curiosity and that is repeatable. So I found that. And I like to call myself an originator, maybe, but not a creator. That's just ludicrous and illusions of grandeur some people have. But yeah, it's certainly a useful tool to look at average session ranges and go back 10 days. And then base your stops, base your levels, base your magnets and reversal points on the exhaustion of those levels or trading towards them. So I like trading towards the ADR and ASR. And then kind of once we're there, I will reevaluate and I will see whether the time of day is right for a reversal. Do we still have enough juice on the day to even run a reversal trade? Or are we in an outlier day? Like you can have ADR and ASR getting exhausted and then they ignore it and they go above Asia high, above ASR, above ADR. What is that? Potential for an outlier day. Systematically figuring out that the trend day is now very much likely. Not going, I think is going up. Actually using data of statistics that are getting ignored. So it's like, damn, these guys are like, they don't care about ADR and ASR today. So I'm not going to go against that. I'm going to wait for maybe weakness and then long with them, not against them. Don't trade against the market makers. That's a very bad idea. So that's like a, you know, very compressed version of what I sort of use it. But again, stay peeled for my Market Stalkers YouTube channel on Friday. I am preparing a video. So I'm going to try doing it a little bit like I did that video for the strategies that works 70%. So I went for a dog walk. And, you know, I think I felt, that was just before I massively got worse with my illness. But I'm going to try doing maybe around the house while I'm making coffee, just talk to you from different points, and then maybe come back to the charts via like B-rolls and stuff. So just to make it more interesting rather than just me kind of sitting and chatting like a talking head video. And of course, adding some dogs, walking dogs, snippets of where we live now. It is beautiful here. It's very peaceful and it's just lovely through and through. All right, so we've got another 20 minutes here. Yeah, Joe is saying forecast for silver in Q2 is between 100 to 150. I'm not surprised. There has been a bit of a disparity between what gold has done and how silver hasn't done it yet. So I think gold has gold at these levels, I don't know what to make of it. So silver, on the other hand, needs to play catch up. So I've got like 75, 80, like easily. And then, yeah, I could see it at 100, 152. Because if you look at traditionally how the silver and gold have traded, they've always traded kind of together. They're pretty correlated. But then whenever something happens in the auto industry, then silver used to go like a little bit crazier. And then gold wasn't really doing much. But then obviously in the last few years, gold has just gone absolutely bonkers. It's like, are we kidding? Gold at 4,500. Like, again, is it some weird Twilight Zone reality that I've stepped in? But it's very interesting though, and silver has a lot of catch up to do. So, great opportunity, I think. Don't know whether January is going to be it, but just traditionally, gold in January is actually a pretty good month for it. Things are a little calmer, but it enables you to still see the positioning of the CTAs and the hedge funds. But I think silver might be rocking into 2026 for sure. Can I post the link to my channel? Bruno has just done that. Thank you, Bruno. How do I get my silver chart to show the decimal on the price to the right? What? Topstep X. They show the ticks. But this chart, is that what you're talking about? This chart? This chart is actually CQG data. So they are, because they provide tick data as well, they don't do it in tick increments. They do it at the most minute things, which are not ticks. So it's it's 2 ticks per handle. Is it a handle? I don't know. 68 to 67. Is that a handle on silver? I'm not sure. So there will be 2 ticks between 66 and 67, right? But this platform gives you everything. It gives you the most minute. I just have to let my Cavalier out because he has some diuretics and he needs to go out. All right, we're back. Yeah, so the CQG data is a bit, how would I say it, anal. So they give you to the final thing, but generally I don't know, all futures. So even though CQG, if you're dragging things along, you will see that they're not doing it by ticks, they're doing it by every single move. Whereas most futures platforms, they will automatically have the decimal. So I'm going to make an educated guess that you're maybe on a Forex platform that doesn't have that, because futures products are standardized and they are the same everywhere. Whereas Forex, if you're trading ZAG USD, that's going to be just terrible and very different everywhere. So, spreads will be terrible. They will probably want to put 5 to 7 ticks spreads, maybe even more. Which means that immediately you have to, if I'm using 55 ticks for my stop on futures, if I'm trading ZAG USD, which I don't, because I absolutely despise CFDs, you would have to add the spread on top of that. So it's no longer 55, it's 55 plus whatever the spread is. Now, for the longs, spread works against you. For the shorts, spread works in your favor. So, there's too much complication for no good reason. We have futures, so I would suggest that you move to futures platforms. But yeah, asking about the decimal point, that is just a platform thing, and it's a futures contract. That's it. Okay. Oh, we've got Bernard. Bernard has joined us. Hello, Bernie. My husband is funny. He just opens the door and lets the dog in. Ah, yes, that's mine.
Delivered to the wrong address, thankfully.
Really?
Their guy brought it back to us.
Ridiculous.
Is it for you?
It is for me, yeah. But there is another one to arrive for you, so yeah. Christmas presents have arrived, so yeah. But yeah, it's actually I bought myself a copper blazer because this is silver, right? So we need to have copper as well when we're trading copper. All right, so silver very quiet at the moment, and as we're nearing the final sort of 15 minutes of the stream, I might just take these 105, just get a bit of a buffer going here. And not much of a buffer, but at the same time, this is just not moving. So I am going to take what's there. I expected more more participation above the initial bounce high, and at the moment I'm not getting that. So I will just wait. I am on fast markets today as well, and while I have 2 XFAs, I do need to save some cash and make sure that I take whatever is there. So if something is not moving and I want it to move to a 70, that's fair enough, but it's just better just seeing how the tape is super slow and there's nobody around, and now the bubbles have gone very small, very, very small, so there's just nobody trading here. So let's wait for a little bit later until the tape livens up, and then maybe we'll get some good trades, because typically if London and Asia are a little bit meh, that can mean that COMEX is going to be rocking and rolling. So we're going to be doing metal markets very nicely later on. But yeah, I mean, I've got nothing else really. I think copper is going to move to 560, so that is something on my radar as well. 555 is a big open interest area. We are reclaiming it now, but I would need to see some sort of something pullback of some sort before I get involved. So maybe if we go even higher, then we retag 555. This reaccumulation, which will become reaccumulation at that point. Maybe that is something to consider later on in the day. But again, I have similar hypotheses. So test of Asia high would be great. Test of 55 if we are above 55. So using that conditional logic if then, and looking at the price action like the execution flow and coding, right? So if this happens, then this happens. So if we go above 55, we need to go more above 55 than where we are now in order to make 555 a relevant support, because then you will have enough space and enough decent pullback to then jump in longs on the weakness, because there's enough. But if it starts to sell off from this area, we're too close at 55, and this would be now a potential maybe to short it back to the Asia high, but because everybody's bullish, and again copper is going very bullish overnight, I do not want to do that. So I will probably stay away from shorts and use the weakness to wherever we are. So we have 555, we have Asia high, we have VWAP that might climb up. But ultimately, if we hit 560, that is where I would expect hedging. So if I cannot get into a long with enough 2R risk reward profit margin, inherent profit margin, then I will be looking for potential hedge, because that is also where the ADR high is. So if we're there and there's the euro close happening, I would absolutely jump in on an intraday short, not to run it for a massive amount. That would be more of a scalp at that point, maybe a single, so 1R, grabbing about 40 ticks out of it, and then maybe looking for more longs somewhere. So yeah, that's all I have for you today. Again, unless you have some more questions, I think I should just finish it up here. Why did I close my trade? There is no movement. And there is nobody on the tape with bigger size to justify. I literally just said that. So if you look at how the tape looks, it's so thin. It's very thin. And the bubbles are tiny. These are all tiny, tiny people. There is no commitment to direction. Everything's very flat. So I just grabbed a few takes, and I expected more involvement after we busted the IB high. We're not really getting that right now. So I do exit trades early if I don't see what I want to see. It's just how it is. But I do use tape to figure out whether there's some juice there. And at the moment, this is all just very thin. So let's wait until, midday. Let's wait for another 90 minutes. Maybe things are going to start livening up. I don't know. If we're still above initial bounce high, maybe I'll run another trade before I get on the fast markets today. But yeah. So yeah, join us for fast markets. I will be there with Dakota, I think Jack and Dre. So we're going to be entertaining you, giving you analysis, maybe clicking a couple of buttons for the Christmas season. But in the meantime, let's wait and see what the metals do today. Yeah. So I think COMEX is going to be the session for today. And then look, here's tape. Look at it. That's why I closed it, because every pump is being sold off. And now we have CVD that has shaved off very quickly. So now if they don't bring it back up immediately, that's just not a good sign for an extension of the initial bounce. It is not good enough. Copper, however, is going crazy, which is great. All right, guys, we're going to finish it up here. Thank you so much for spending your time with me. I really appreciate it. Let's see what the day brings. And yeah, I'll see you for the fast markets. This was the Eurotrade. I'm Marcus Tokadi, and I will see you a little bit later. Goodbye.